JB Cycles here with an update on December the 28th. So the S&P looks to be in a corrective ABC move where the C down has just begun, and down here we have the 4-week cycle in black, and it changed around August this year after being stable for almost 2 years. The old cycle is here in dotted green, and I should mention that I'm not very satisfied with this new black cycle. It's not behaving very... I don't know if it has stabilized yet. You see, this low is early compared to this new calculated cycle. This one is pretty spot on, but now it gets late, and this one is even later, and here it was disturbed by the Thanksgiving, so we have no real low there, and now this low was early, so I'm not trusting this cycle. So I think I will not use this cycle in my forecast. I will rather look at other cycles and other indicators. So this normal ABC pattern is probably what we should look at, but you know, ABC corrective moves can be in many forms and shapes. Here first we have the normal ABC, and then we have a double top, then we have a sideways consolidation, then we have the triangle with a final higher low, and the most tricky one is the rising flag. So you know, what kind of ABC will it be? And it began very slowly. I thought this does not look bearish, and then we crashed down in just a few hours, but then we bounced all the way back up. So you know, it looks to me that looks like time is running out for bears. This drop looked promising, but this huge recovery, I think maybe we should look for some kind of a double low, or well, we have to see. Zooming out, we have the 3.5-year cycle here in red. We are no longer in this very bullish green part of the cycle. Now we are in this yellow topping phase, and my general scenario is this dotted one with a top around February-March. That's my primary scenario. And short term, we have some cycles to help us. This is a composite of 3 cycles, but I should say actually it's only one of these that I classify as a cycle, and that's the 17-week cycle. The 13-week cycle, or the 13-week oscillation, is the quarterly one. It's the earnings cycle or the seasonal cycle, and the 10-week cycle is a bit of a mystery. It's maybe more of an oscillation, a typical oscillation, and not really a fixed cycle. But I also have some hints and evidence it could be a cycle. So anyway, this is the composite, but this is the most important one, I think, the most dominant one, the 17-week cycle. As we see, it topped out just after the election, and it has a low in January. So the market made a very late top in December and is now headed into the cycle low in January. Let's see, it has a date around mid-January. So yeah, into mid-January we should be aware of more bearish action. So looking at the daily wavelets for the S&P, so you know, this bearish red scenario is still possible, but I have this primitive tool here, these purple rectangles placed at this purple wavelet top. It is of 26 trading days and gives a rough estimate of where to expect the next low. So I'm placing it here at the wavelet top, and it suggests there's still about 1 week with expected downside. I should also mention this is with bull market rules. If this is just about to turn into a bear market, which I do expect it to do this winter, we can have even later lows, and that's a kind of a hint or a confirmation that something more bearish is about to happen. But I would primarily look after a low in about 1 week, and that would be a perfect ABC corrective move. So we have the VIX wavelet, the 10-week wavelet for VIX in red. The wavelet is about to make a top soon, and inverting it, comparing it with the S&P, it suggests we are soon to see a low in the S&P. And I have two projections for the S&P from this VIX wavelet generated from this point and from this point. And these two projections are very similar, both suggesting, about 1 week with possible downside is what to be expected from this one. And the other one, pretty much exactly the same. Be aware of more downside for another week to complete the ABC corrective move. And then I think finally we have the hourly data for Dow Jones Industrial. So we have the 2-week oscillation in yellow, and I thought it would be disturbed back here because of Thanksgiving. It looks kind of disturbed, but it first came over here in December. So I'm not quite sure if the 2-week oscillation, is it still like this? Will it synchronize with this one soon, or shall we place it from here? So I think this is the most correct interpretation, and we see we are in the middle of the 2-week oscillation right now, meaning we have 1 week left to see a low. And my general projection was this black one, so this one confirms the other stuff, suggesting we have an expectation of about 1 week with downside to complete this corrective C move down. A, bounce B, and then C. But then, so if we get that, that doesn't look too bearish to me, a corrective move here, a double low or a lower low, we are still pretty much within this trend line. So I don't expect the market to crash down here below the election low and this previous top from the summer. No, it looks like, well, we could have another 2 weeks possibly with bearishness from the cycle, but the pattern suggests 1 week. So, it could extend into mid-January, and then of course it could go even lower, breaking this trend line. But anyway, you see this red cycle, I haven't drawn it into February-March here, but as you see, we are approaching a cycle low. And then it goes up into February-March. I think whatever happens here of a corrective bearish move, we should at least see a double top and probably a higher top in February-March. But then we should see momentum declining, starting to see some kind of a wedge pattern, feeling of a wedge. The tops we are losing momentum. More sideways, more volatility, starting to see some heads and shoulders, and So that's my scenario. Bearish 1 or 2 weeks, and then up into February-March probably. That could be the bull market top. See ya!